How would you manage a crypto account that reached six figures in 1 year? Would you take profits in fiat or reinvest it? And what portion of split if you suggest both? Okay, kind of similar question, but for anybody out there who's making money in the bull run, I mean, I would just use, because somebody's saying it's still a taxable event since you converted DAI into USD. Okay, I'll have to talk to my accountant about that. But anyway, how would you manage a crypto account that's made six figures in 1 year? Bill, comments on this.
Okay, well, we have this saying on the show that if you made money, pay yourself, right? In other words, if you turned a little bit of money into a lot of money, take some of it, have it there, pay the taxes, look at it and say, okay, I did a good I did a good trade. I've paid myself, right? When it comes to how do I take profits or like what the signal is, what I tell people is this. If you're sitting at your desk and you look at your P&L and you're like, oh my God, I cannot believe how much money I just made, take some of it. If it's a super small altcoin, maybe you can take all of it. Now, I know that hodling, I know that borrowing money against tokens makes all the sense in the world. I get it. That's probably what you should be doing with most of your money. Crypto, for some reason, has this like all or nothing black and white thing, right? I'm either betting red or black. I think if you follow this pay yourself strategy, like if you take out 10% of that money, pay the taxes, and build a deck on the back of your house, what to do with the rest of the money will come to you. Maybe you do what they do in equities. Maybe you'll rotate your sectors, not investment advice, right? I got to be real careful about telling people what their portfolio should look like. You know, I recently rotated and spent some ETH on alpha and perp. That's what I did, right? So you do kind of like a sector rotation. You know, I'm looking at Rari, I'm looking at wearable, audio, etc. So one exercise that you can do is you can take some of your big cap coins like your ETH and start to build yourself a portfolio that you can watch. You know, not all of it, but some of it, right? Because if you watch Jad and you continue to watch us on Token Metrics TV, where we're going to differentiate ourselves is that we're going to talk to you about portfolios, not just Bitcoin and ETH and not just the small coin you heard about on some YouTube channel, right? We are going to help you invest. And one of the things that you can do when you move a six-figure account around after you pay yourself, what are you going to do? You're going to diversify. You're going to have decentralized content, a DEX, stuff traded on Coinbase Pro, an NFT play nobody has seen, low cap DeFi, low cap derivatives maybe, future of Wall Street, okay? The future of insurance, okay? The future of blank. If you wrote that down on a piece of paper and said, the future of blank, if you can fill in a coin, if you can do that 5 or 6 times, congratulations, you've got the beginnings of a portfolio. You can get ideas from our site. I don't want to overtalk it, but you follow what I'm saying. There are pieces of it. It's not just all or none.
All right, thank you, Bill. Let's go to Forrest. How would you manage 100 grands you made in 1 year?
Yeah, I'd go back to what I said earlier. Taking profits is extremely important for every reason Bill just mentioned. That being said, the reason I've harped on stablecoin DeFi is that what's the reason a lot of people have been getting into crypto lately? What's the reason people are buying Bitcoin? Why are institutions buying Bitcoin? Well, if you ask them, a lot of them want it as a store of value, but a lot of people are adding Bitcoin to their portfolios because of inflation. Now, I've looked at some investment or some supply chain research that has shown the cost of freight from overseas has doubled in the last year, right? That's going to be probably hitting the consumer goods market within the next couple months, I would imagine. We're continuing in the US to print a lot of money. The reason that I think a lot of people are getting involved in crypto and a lot of people are getting involved in Bitcoin is as a hedge against inflation. That's what kind of kicked off this entire bull market, aside from the Bitcoin halving. Right? That's been the narrative. Now, do I want to take profits back into US dollars and then be subject to high inflation rates and just watch my purchasing value of my dollars waste away? Well, if you need profits and you need those dollars to actually buy something, maybe you buy a house, maybe you need a car and you need to buy a car. Sure, that's fine. But if you can earn, if let's say inflation goes to 3 or 4%, but you can earn 7 to 15% in stable coins that are pegged to the US dollar, earn 7 to 15%, you're continuing to make money. And right now, there's stable coin pools that are earning as high as 20% legitimately, right? So if you're earning 20% with very low risk on your US dollars or your US dollar stable coins, you're outpacing the average market performance of the S&P 500, right? Average S&P 500, I believe, is between like 7 and 10% per year. If you're getting 20% on your stable coins, you're not only outpacing inflation, you're outpacing a lot of traditional investment vehicles. So that's why if I was going to be taking profits, and I will be, I plan on taking profits, I'm going to move those profits into some DeFi pools, some DeFi instruments that have higher yield.
All right. Thank you, Forrest. So my response, how would I manage 100 grand profits I've made in crypto in one year? I think same strategy just kind of covered, right? I would definitely take out my initial investment. I would acquire more Ethereum, especially staked Ethereum. So let me actually share this website. This is a project. I do own some staked ETH right now. I think but I haven't really converted all my ETH into this. But it's basically Lido, lido.fi is the website. You come here and you basically stake your Ethereum. You deposit your Ethereum. The APR is 5.7% ETH you're earning, right? But basically, if you come here, you stake with Lido. They send you basically deposit your Ethereum. They give you ST ETH. Then you can use this in DeFi the same way you use Ethereum. And it's basically a token that gives you, or they airdrop you every single day, the rewards they earn from staking ETH. So it's basically pulling your ETH to stake. So I would definitely use this to just earn more ETH long term. Then, as mentioned before, I would use loans. Then I would look to reinvest into other projects, but only solid projects that have a code review over 80% with good fundamentals. And right now, the main thing I'm looking at projects I actually like using, because I think that's the next way to filter out. Because somebody mentioned in the comments that there are so many great projects happening right now. Our team is putting out daily newsletter with so many great projects. How do you pick which ones to invest in? And I think if you just pick projects that are solid with a solid code review and solid fundamentals that you actually find useful. So for me, Lido Finance, Liquidity, Alchemix, all these are projects I'm actually using. I'm an actual user of these projects. Armor Insurance. So for me, I would probably acquire those projects and put about 5% of my portfolio into that. So that's the strategy I would use. But I would not add more money into crypto. I would just take that 100 grand and try to flip that into 1 million, then into 10 million, then into 100 million. I'll just try to multiply the money. That's the strategy I would employ. So tell me what you think down below in the comments. Now, before we go, I want to answer a quick question. Somebody mentioned here that when you convert LUSD into DAI, or basically stablecoin to stablecoin, it's a taxable event. Now, not financial advice, not accounting advice, definitely talk with the CPA. But my understanding is a loan is not personal income. So let me pull up my screen here. A loan is not personal income, so you cannot be taxed on it. This is something employed by lots of, I would say, Wall Street execs, or for example, like Elon Musk, right? Jeff Bezos. They take their company stock options and they use them as collateral to then borrow against that without having to pay capital gains taxes on their stock options. So we're doing the same thing with crypto, right? So as you see here on the screen, just go into Google, type in Producer, if you could pull up my screen here. Yeah, so obviously not financial advice, but the understanding is that personal loans, taking out a loan is not taxable because it's not treated as income. And then the site I mentioned here, going to Curve, right? Converting LUSD to DAI or any stable coin, I'm actually losing money on this, right? So even if this was taxable, it's not profit, right? The cost basis has decreased, right? Because I put 22 grand and I'm getting less than 22 grand, right? So even this is not profit. So how would this be taxed, right? Definitely go through, do your own research. But I think this is really gonna be amazing for people now in crypto who want to cash out, because we're doing all this with DeFi, with no middleman. We're borrowing against our collateral. Right now, liquidity is only Ethereum. Alchemix is only DAI. But as they add other assets, other tokens, stable coins, altcoins, this could be a game changer, right? So that's the strategy. Okay, so
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.